So, good evening. Now we are with Mr. Professor Soumik Bhusan. Sir teaches finance here. Basically, sir, you teach all the years, right? The second year. And okay. Third year. Yes. This year I have also taken some classes in MBA. Okay. Second year. So, sir, we'll start with your career journey and about your pathway. We have seen multiple things in your the LinkedIn. Actually, you're a CA. You've done PhD. You're a professor. You have been a founder, and also you've been into consulting. So, sir, how did you strategically plan your career transitions?
Yeah, that's exactly what I've not done. I've not planned any strategy. I just moved on and thought what is a good problem to solve.
Okay.
It might sound very cliche, but honestly, I've not very strategically planned the career, because if I had to be strategically planning the career, then I would have, literally, stayed in my comfort zone and possibly would have tried to go very deep into one domain, which is what I have not done. I have, being a chartered accountant, generally people are into finance and accounting domain.
Yes.
But I have tried to try my hands around other aspects like operations, IT program management, as well as customer service, which has given me a holistic view of how businesses are run. I think I would say that that's what.
So basically, from the very first day, you've been interested in exploring various domains.
Not really. Honestly, like I never thought that I would even be able to achieve what I have done so far. I mean, I just started as someone who is possibly a little curious to know things, and that's how my journey started. Like I started my journey into a proper corporate role in my initial days after finishing the articleship of Chartered Accountancy, where I joined Center for Monitoring Indian Economy as a equity research analyst, and we started learning how investors or external stakeholders looks into financial numbers, what metrics to be seen, and I think that was the job which enabled me to understand how financials are interpreted with what lens, and then it just happened that after my chartered accountancy, I got placed in Goldman Sachs, and I possibly also learned something other aspects of global firms operate. But then I moved into the industry side, where I started my job in the retail companies, and then I realized that how numbers are seen internally, right? But that's an important thing, how you measure performances. Possibly you will not prepare financial statements more than 12 times in a month, right? But there are multiple MISs, which are internal statements which are made by companies to out that MIS, Management Information System, which are typically reports which are made for running the businesses effectively.
Okay.
So then I realized that there is a lot of things which goes behind a financial statement, and the real information actually gets stored in those financial packs, right, which are made every day, every week, every month, which finally, of course, rolls up into a financial statement number. But what you see in financial statement is a much rolled up number, but the real data or the real information actually lies at a much.
It's like a data sheet, a raw data sheet.
Yeah,
the file report is the.
If you are in a retail company and you are selling your products through an offline store, the daily sales data, right, which means that every day you are possibly selling so many units at order level. Right? So what type of units are getting sold together? What are the typical ASPs? Of course, when you see a rolled up view, you only see sales for a particular quarter or for a particular year when you look into the financial statement. But what product category has got so many? Within the product category, which brand? Those are the real elements where decisions are taken. Say, for instance, when sales has gone up or come down, right? If it has come down, the decision can't be taken at the sales level, right? Yes, someone has to act at a brand level, possibly, to see why that brand is not doing good. So that is never kind of coming out in a financial statement. It is only coming out when you are internally seeing the numbers. Right? So that is the next level of learning which I had, that when you are sitting inside a finance team,
Yes.
what all different statements are made to drive visibility for the businesses and so on.
Sir, what about the challenges you faced while these transitions, like moving from a student to a job? From there, you're done your PhD, a founder, and now you're into academia. You're teaching. So challenges, sir. the
One thing I always say that you know life will need a different version of you at each different phase.
Yes, sir.
So when I was possibly doing reasonably well in career, when I thought that no, I should possibly do a little bit higher studies. So then I realized that this is not good enough. I have to do more, right? Because it is not good enough to possibly be at your best. So I think career transition that it will happen. I think one thing which kept me moving, I would say curiosity. Right? Always thinking that the comfort zone is not the zone where I possibly want to be. It has of course got a plus and minus because at times you have to. It is good to also be in a comfort zone at times, but because every time you can't be always unsettled. But I think it has helped me in my favor in whichever way. Now I think that after 20 years of working in the industry, I would possibly say that any decision which has been taken at that point in time, which I felt it is a bad decision, now feels to be right because if that decision was not taken, I would have not been in this place where I am today, and I am happy where I am today. Say for instance, I was doing reasonably well in a very large retail company in India, and I was of course much younger at that time, and I was getting exposure to work with the senior management at that age, where between me and the senior management there were possibly 10 or 12 levels to reach, but I got a visibility to work directly for some projects and got visibility to present at the age. And in 2 years, I left that company, right, for a little better, I would say, salary. Okay, not a very high salary, but little better salary. Because I thought that I have a loan and it is better to have a little better salary so that I can make my EMI.
Yes, sir.
But then after shifting, the day one I felt it was the wrong decision. But what happened there is that there I got exposure to learn about systems, which means that generally as any finance spoke, you would possibly be the end user of a system, whether it is SAP, ERP or any other system. You will typically not be exposed to how that system is designed in the backend, meaning what processes are feeding into the system, what are the different elements of data which is getting captured. So I was, put into a project where I was getting exposed to implement a CRM system, even re-engineering and ERP in that company. I think that gave me a one big push or lift in my career where I started to see things with a more operating lens than a typical, like a finance person where who are only analyzing numbers, which is, extracted from systems. So I would say that I think that has been a good shift change. So I can say that curiosity was the only thing which I would say what would have driven. Because if I would say that I'm a finance guy, I am not interested in knowing how system works. Possibly I would have been a failure in that. But now I see that what I am today, if I am able to even speak 0.01% about how system works, is only because that decision which I took could be a bad decision at point in time, but has helped me to navigate where I am today.
So, sir, as you said now that whatever was your career path, like every step was good for you, being it good or bad at that time, but now it turned out good. Actually, we have a question similar to this at the end, but I'll ask it now so that it'll be a good follow up. So, sir, going back, do you feel like there was any point which you regret or not doing in your professional career, like a switch or anything, which still feels like a bad decision today?
Yeah, so as I mentioned, so there are two things. One is that one thing which I felt that what I regret is that possibly I didn't study when I should have studied. Right? You may think I am a CA, but CA I have possibly passed. While I passed my intermediate levels at one go with split groups, but final has taken a lot of time, and then it's not that it could have taken that much time, but I know that I have not studied. The year I passed, I it was like a real effort which I put. I always feel that I've almost possibly, you know, lost three and a half to 4 years in that phase. So I wish I could have studied. But the other view of it is that because I didn't study that time, I had that regret in mind. That's why it propelled me to even pursue a PhD, and that regret stayed with me for even now. I feel that it is there, and hence I always try to keep on learning something or the other. But I think that is one thing. you ask me to change. That is one. Second is that I still feel that the change which I did in that large retail company where I stayed for 2 years and then moved on, I think that if it was today, I wouldn't have changed possibly. I knew that I could have also grown in some role, which would have been equally useful as we have done today.
Yes. So, sir, since you mentioned that you worked in Goldman Sachs, there's this myth that even our professor said if it's a first job, not go for big companies or big fours, go for a startup. There's more opportunity for learnings. So, do you feel that it's true that if it's our first job, we might not care about the salary, but eventually go for a startup rather than joining a big firm?
It is not about startup. It is about you should not chase money. So one thing philosophically, what I have tried is that I have not chased money for a career. Money has happened as it has to happen. Say for instance, I was earning reasonably well when I was doing a job in Dubai, right? And if you apply those days exchange rate, which was possibly 17 rupees per dirham, it would have been a fairly handsome salary. But when I thought that I had to come back to India, and knowing that I'm no big shot and people will just bring me in, I had to take a salary where it was negotiated that if I would have worked in India and if I would have got a inflation adjusted hike for 2 years, I would have reached some X number, and that X to the number where I was kind of getting paid if you convert into Dubai salary was fairly large. If I wouldn't have accepted that X is good enough for my living in India, I wouldn't have been able to join. So I have generally not chased money, and money has never been my kind of a decision making criteria. And hence now coming back, I would say that I tell this even to some of the students who has come to me for some suggestion is that even if you're a finance person, if you are getting a job in operations or sales, please do it. You can possibly be a very good finance person if you know sales and operations. And I personally believe that I think if I am able to make infinitesimal difference in the way finance is done is only because I have done an operations role, I have done customer service role. That is one. The second point is that, like as I said, that like most chartered accountants, I have started my like a office job being an articleship, and after that I joined the CMIE, right? So during those days, because time was there was kind of nothing else. It used to be that literally I'm the first one who is in fact opening the shutters of that office because it was a small office set up in Calcutta. Last person to go, keep on reading whatever is there and keep on trying. So I would say that it might sound very philosophical at the age where you're sitting, but now at my age I can say that don't plan too much, right? I mean, just do the right things, it will happen. If you're able to do the right things, and my view of right things are possibly limited to three, right? Take care of parents, don't harm others, keep learning. If you're doing these three things, I think possibly money will come. I have not seen, at least if I can only give example of my life. I have seen that by God's grace, I have not, there is no scarcity in terms of resources, right? And resources doesn't mean money. You may have a lot of money, but if you don't have people around you, if you don't have family around you, there's no meaning of that money. So again, very philosophical. Not that we have to understand what it means.
No, so it's actually true. Like we are not that mature to understand it, but we sometimes realize it bit by bit. Whenever we are stressed, like when we are stressed about our results, everything, or we are overly happy about our results. Also, whenever we talk to our parents after that, just after seeing our results, there is a sense of feeling which we can't understand. Maybe that is what you are trying to explain, which you are not able to realize at this age. But yeah, going ahead with the age, maybe we'll also experience it.
But one thing for sure, don't try to chase money. In many cases, I will still say that, of course, like those days, whatever salary I was getting, I'm talking about 2004 5. Possibly there were many companies which could have paid a little bit more or much more than the salary.
Yes.
But the amount of learning which I had, imagine that I was possibly analyzing one food sector, which was banking. So all the banks, when they were publishing the annual reports and quarterly, they had to write detailed reports which were actually sold to multiple customers, where you are giving, your view about how the sector is doing or how this individual bank is doing. There is immense learning, and I possibly have started to think that over a long period in time, right? If you are in the market, you will be paid for your skills, you will be paid for your intellect, you will be paid for your knowledge, and it's not that you have to make a lot of money in the beginning. Possibly you have a runway, say 20 years or 30 years of runway. If you make a large sum of money in the middle or in the beginning, in the end, it is safe. Because possibly you will not make abnormal money in life unless you are something superhuman. I mean, and not that everyone will be the likes of a Gates or a Bezos or the Musk. Right? We are we will be more on this side, that line. Right? So.
So, sir, one last question about the career journey. So, sir, what skills helped you move from corporate leadership roles to academia and consulting? Like the skills from every phase, the skills which you upgraded or the skills which you learned for the certain job role.
Yeah. The skill I would say was only I would the same word I would use the word as curiosity.
Yes.
Say for instance, as I said that I always had the regret of not studying as much during my CA days. So when I came to Bangalore to Calcutta and joined this firm, I felt that there is so much of spread of knowledge which is not known, because in chartered accountancy we were taught few things in a much deeper way. But if you are in a kind of conversing in a ecosystem, you possibly need to know few other things which might be something which is happening in the in the sphere that you should be aware of. Say for instance, again 2007-8 analytics just picked up, right?
Yes.
And that time AI ML was not something, but analytics per se was there. And in my mind, what is analytics? Analysis is something which you possibly do at a larger or a rolled up data set.
Yes.
Analytics is something which you possibly do at a last granularity of a data set.
Yes.
So that's what I said, that if you are analyzing sales, if you are analyzing using sales as the as an attribute, then it is analysis. But if you are studying sales at the order ID level, that is analytics, because there you will get more information about even that order ID, which is the customer name, what is the demography, what is the customer, other parameters, age, proximity of the customer living near to the store or not. A lot of the parameters you can take. So that's analytics for me. I mean, at least that's what I had thought those days. So I thought that it's good to at least be aware of analytics. So I did a course on analytics. Right, and that has helped me to at least understand what is analytics. Right. So that was the time when I got exposed to certain statistical tools like principal component analysis, multiple regression, which I was of course not exposed to at that time. Yes. Not that I have become an expert, but I think this awareness helped me to navigate better conversations. So, in fact, there's a story that when I was in Bangalore that time, and I was full of regret, that wish I would have studied better, because the moment I joined this firm in Bangalore, I found that I'm not so happy, because in my previous firm, while they were paying me possibly 1/10 of what I was getting in Bangalore, the quality of job was very high. Here the job was good, but it had scale, but not not that intellect which I was looking at. So then I felt that it is okay. So what should I do? In those days I took a personal loan from a bank at 14% interest, and for 1 lakh, right? Because I thought that I need to spend money on something I need to learn. So I did a course on being well Six Sigma from Indian Statistical Institute. I did a course on analytics. Not that if you ask me, am I an expert? But of course I'm not. But I'm aware what has to be done if you have to solve a problem using Six Sigma.
Yes.
Because then you can hire someone who is good. Right?
Yeah.
So the other thing, I hope I can add to this question, right? So the other thing which I also realized is that, and again, this happened to me when in my last role when I was, handling the role of a CFO, is that you'll be never an expert on everything. You possibly will know one domain very well.
Yes.
Now the way you manage other domains is to hire the best talent for that.
Yes.
So my whole experience in finance has been more around business finance, meaning we were typically trying to drive decision making using financial numbers, so that the businesses are taking the right kind of decisions. Say for instance, if I am trying to buy some particular product, should I buy or should I hold on? If I want to make an advance, should I make an advance or negotiate? If I make an advance, what should I ask from the vendors? Right? If I want to take a loan, what should be the right interest level, or how much loan I should take? Right? Those type of use cases were mostly something which I have been mostly exposed to, and of course there are a lot more in that domain because now every day you have to take a lot of decisions which has to be backed by finance logic. However, there is a other bit of finance which is into compliance, which is around statutory reporting, which is treasury, which I have not done at the same level of depth which I have done business finance. Now, when you are a CFO, you have to handle everything. Right? How do you do that? If you think that okay, at the age of 40%, learn and do, I mean, you don't have time because it's a running business. So you hire the right talent.
Yes.
Once you hire the right talent, how do you ensure that you are able to get the best out of that talent? That's where the art comes in. That okay, you need to define certain metrics which you can keep on monitoring on a daily or a weekly or a fortnightly or a monthly basis, which can give you early warning signals. Say for instance, simplest of the metric. The GST returns have to be filed within certain date. You all know that it has to be filed by 11th or 28th. Right?
Yes.
Just a metric saying that number of returns filed within the deadline. If I am in say June, I know that April, May, June, 3 returns should be filed. If 3 has been filed within the deadline and it is which is 100%, it means I should not worry about the filing. So, right. So you need to learn the art of how do you have a visibility of a business which is beyond the line of sight. Because once you have taken very senior roles, you will be totally out of the ground. And if you ask me as an individual, I always love to be on the ground because that's where you can roll up your sleeves and solve problems. So once you grow, you will be at the top of your some organization structure. Then you need to know that how do I still get a sense of what's going on ground. That's where the art of metric management comes in.
Okay. So, sir, now we'll move towards the financial operation in supply chain finance.
Yeah.
Sir, what inspired your Harvard Business School case on supply chain finance?
Yeah. So
Also, can you explain about the paper?
sorry.
Also, can you explain a brief about the paper?
Yeah, sure. So, and again, this thing came out when I was the CFO of the companies, right?
Yes.
So, what I realized is that, it is not a top line or a bottom line which possibly drives whether you will get a bank loan or not. Say, for instance, if you are a company and from day one you are doing good sales and you are profitable, there is no guarantee that you will get a loan from the bank. The reason is that a bank loan possibly comes only if you have a vintage, which means that you have been in the business for a certain period in time. It should be backed by a good founders or promoters. And third is that there should be some I would say recurringness of the business.
Yes, sir.
And there should be knowledge about that industry and typically the traditional lending system should be aware that this is fairly
Good business.
good business to be in. So when I was the CFO of this company, we struggled to get banking lines because of multitude of reasons. I'm not going to reasons, but what I felt is that. But how did we survive? We survived because we were able to get funds through alternate channels. So what are these alternate channels? These are typically supply chain partners where you can get some funding lines. It may come at a little higher cost than the traditional banking channels, but at least your current problem is solved. And once you grow and once you get a banking, possibly all this high cost source you can anyway close, right?
Yes, sir.
So we were able to raise quite a mouthful number through the supply chain partners. Right? And that was the genesis of the thought that should we write something about this emergence of supply chain finance in India? While it is quite a topic which everyone has been talking about because there are a lot of finance or supply chain partners or fintech companies which have evolved and emerged in India. But in reality, how does it work? Right? How do you approach this firms? What are the different I would say, elements which these firms see when someone is evaluating, because the credit evaluation process doesn't change. So whether you're taking from a bank or the supply chain companies, the evaluation is still the same. They will want a financial, they will want a protection. Of course, there will be some qualitative elements which they will see. Say, for instance, what is the pedigree of the founders, or the pedigree of a CEO, CFO? Have they been in the industry in the similar industry for long? Right? Have they been compliant in filing returns? Right? So the idea of this was, can I create a simulated environment where I take a sample, like a company which has approached a fintech or a supply chain company, and position it in such a way that there's a conversation happening between the fintech and the founders of the company, and they're asking a few things about the business and what are the ways that the company can be evaluated, both with the quantitative terms, which are the financial projection, and also on the qualitative terms. Right, and that should give some visibility about how things happen. The other thing which I also felt is that typically why these non-banking financial companies or the fintech partners, right, why they have a higher cost of funds is because typically in India the cost of funds is calculated based on the concept called as a marginal cost of lending rate. Basically, there's RBI regulation which says that if this is your cost of your funds, right, you can give a loan to the borrowers by first computing what is your cost and then adding some margin to it. Right, so there is a formula by which it is given, and that was always, I was very curious that how that formula is developed. Right? So in this case, I also touched upon that concept of marginal cost of lending rate, how it is computed. Right? There is an element of adding back CRR, which is cash reserve ratio.
Yes.
Now, like any banks which are operating in India, there is a 4% CRR, which means that if a bank is taking 100 rupees from any depositor, like me and you, who are keeping the money in the savings or fixed deposits, 4 rupees has to be kept with RBI,
Okay.
and that 4 rupees is kept in the current account of RBI, and the bank doesn't earn any interest on that. So implicit there is a cost of keeping that money with RBI, right?
Yes.
So that implicit cost has to be added when the banks are trying to find their marginal cost of capital or the lending. So those elements also have tried to bring into the case so that students are aware of
Yes.
these concepts and so on.
So, sir, in simple words, can you explain what is supply chain finance? Because many of us can't relate supply chain with finance. So,
Yeah.
in simple words, just explain. Just
Yeah.
to us.
I can explain simply, but it will be long, right? Because
Yes, it's fine.
you understand supply chain first, right?
Yes.
Why do you use the word supply chain? Is because how is your supply connected to the company? Meaning, if you are selling goods, you need to procure the goods, right? Which means that the goods have to be bought from a supplier.
Yes.
So that is the connection between the supplier and the company. That is the chain in which you are getting the goods. That's why the word supply chain has come, right? Now, once you have bought the goods, you have to pay, which means you need money or finance to pay. That's why the word supply chain finance has come. Okay? Supply chain just means that there is a supplier who is adding to your value chain, and to finance that purchase which you have made, how you are kind of trying to get your capital.
Okay.
You can get the capital from a bank, you can get the capital from your NBFCs, you can even get the capital by raising equity.
Yes.
So supply chain finance traditionally means that how I am trying to finance for repaying the money which for the goods which I bought from the suppliers. Here,
Yes, sir. Yes, sir.
Also, sir, in the paper, this mentioned that based on the invoices or payments which are yet to be received, we can use that as a collateral and take loans. So, don't you think that will somewhere increase the risk of default in some manner? So, how would you counter?
Yeah, so and that's what I said. This NBFC is Supply chain finance doesn't mean that there is no credit evaluation. Credit evaluation is always there, right? So, but to explain your question, I think you all should understand the concept of invoice discounting, right? So there are two types of discounting of an invoice, okay? One is called as sales invoice discounting, and another is called a purchase invoice discounting, right? Now, to explain this, let's assume that there is a company X and there is a supplier A, which means that X is buying from A. So when X is buying from A, X will give a purchase order to A, and once A is supplying the goods to X, A will give an invoice to send the goods to X. Right? Now the underlying document in this discounting, whether it is sales or purchase, is the invoice. Now why we have got these two elements of discounting is because who initiates the discounting. Okay, if X, which is the buyer of the goods, initiate the discounting, which means that on the day of credit completion, meaning say when X is buying from A, X will ask that give me 30 days of credit, which means on the 31st day the money will be will be due to be paid to A. So when X is paying the money on the 31st day, the immediately when the invoice gets due, that is called as purchase invoice discounting. Because purchase invoice discounting is initiated by the purchaser of the goods, right? On the other hand, sales invoice discounting means when the seller of the goods, meaning A in this case, because A sold to X, right?
Yes, sir.
So when A is initiating the discounting, now the question is that why will A initiate the discounting? Because A by contractual term will get the money only on the 31st day.
Yes.
Because 30 days is the credit period.
Yes.
But if A wants to roll the money faster, meaning that if I get the money on the 5th day, I can again source more products or manufacturing more products, and then again have a better turn of my inventory. Then I can use that money. So if the discounting of the invoice is initiated by A, which is the supplier, that is called a sales invoice discounting because the seller is initiating the discount. Now, when a seller is initiating the discount, the way it works is that there is a supply finance or supply chain finance company or a fintech company. A will come into kind of contact with the company. A will say, I want to discount my invoice. This invoice is an invoice which I have billed to X. So can you evaluate and kind of discount me early? So sales invoice discounting is also called an early invoice discounting or early discounting. So this fintech company or the supply chain company will evaluate X and also evaluate A. They will mostly evaluate A, right? And then what they will say, okay, I'll assign you a loan to value, and in short LTV. They will say, okay, if the company finds that A is credit worthy, then they say, okay, I'll give you 80% of the money, which means that on the 5th day or the 2nd day when A gets that invoice or upload the invoice into the platform, they will immediately get 80 rupees. Now, on the 30th day or the 31st day, when X was supposed to pay to A, now X can't pay to A no, because the supply chain partner has already paid 80%. Now, the way this is set up is that in the books of X, in the supplier master, right, there is a shadow account or an escrow account of A, which is updated, which belongs to the supply chain partner.
Okay.
So now on the 31st day when X will pay to A, the money will go and sit into that escrow account, which is monitored and managed by the supply chain partner. Now what the supply chain partner will do, they will then calculate the interest which that company has to charge to A because they have given the money almost like 25 days before it. He was supposed to get on 30th day or 31st day. They gave it on on the end of 5th day. So 30th minus 5th is 25 days, right?
Yes.
So for the 25 days, X will, not X, the supply chain partner will calculate the interest, and out of the 20 which is remaining, they will reduce that interest and give the balance back to A.
Yes, sir.
Right? So that's how it works. So in sales invoice discounting, always remember that it is the the seller who is initiating discounting. And in case of purchase invoice discounting, it is initiated by the supplier. Now, in purchase invoice discounting, as I said that on the 31st day, the purchaser will tell the supply chain partner pay A. In that case, there is no early discounting, right? The A is getting paid exactly when the money is due.
Yes.
Now, what happens to X is that this supply chain company will also give some extended credit. So they may give 45 days, 60 days, or 90 days. So X also have a now elongated runway. They got 30 days from the supplier. They got possibly 60 days from the intake of the supply chain company. So 60 plus 90 days is the total credit period which the company enjoys, meaning which X enjoys. So,
Which they can take leverage on.
Yeah, and now which means that if in 90 days they are able to sell through all the inventory and all, and they have enough and more cash to pay. So that's how the mechanism works, and that's what I'm trying to cover in the
People. So, sir, you did the case about a company named Zuron.
Yeah.
So, can you just give a summary about the company, what it does, and
So Zola is again like a fintech company. They have a platform, so they have got multiple NBFCs or other finance companies in the backend, which finance or provide the fund for these transactions to occur.
Okay.
So they have been usually someone who has enabled this platform. Because as I said, in the supply chain finance, typically you are a fintech company, right? The fintech company possibly may not be a NBFC.
Okay.
Fintech is backed by an NBFC or banks or something like that. They are just a platform which is enabling companies to share invoices which can be kind of discounted.
So, how does supply chain finance impact MSMEs and startup ecosystem?
Yeah, the same thing, right? So as I said that if you have to get a traditional banking loan,
Yeah.
right? Banks are much risk averse, right?
Yeah.
Versus that you need to have vintage, meaning you have to minimum say 5 years of sales.
Yes, sir.
Right? And if you're a small company, they will possibly give a higher risk rating, which essentially means that you may get the loan not at the best of the rates.
High interest rates.
You'll not get a loan at a sub 10% rate. You possibly get at 12%, right?
Okay.
Now, and also they will ask for lot of collaterals, meaning
Yes.
they will ask for inventory coverage. They will also ask for personal guarantee. They will also possibly ask for a tangible asset, meaning your house could be
Yes.
given as security. Now, this becomes too much for MSME.
Yes.
Right? And hence, I think these MSMEs who possibly don't have a vintage of operations or may not have a collateral itself. Right? Not that everyone has a house or a building which he or she owns. That it is not always easy to just put everything on mortgage as security. Right? So now they always go into this non-traditional banking opportunities which are enabled by the supply chain finance. Maybe they will be paying some 2-3% extra, right? But they feel that it is an easier access to capital rather than waiting for the banks to be budget. By the way, just remember that banks in a way are also the ones who are also funding the NBFC.
Okay.
Right? Now, how will this NBFC get money? They will either get money from some institutional investors,
Yeah.
or banks. And hence you will see that when NBFC is taking the money from the bank to fund this, they get at a lower interest rate. They may get at 9%.
Okay.
And hence to cover their cost of capital, they will give the loan to the MSME maybe at 14%, 15%.
Okay.
So which essentially means that the risk of credit, the credit risk still in a way lies with the in a way NBFC because they are the one who has given the loan. But the way RBI possibly manages the risk in the system is that they have also changes the risk weightage of these loans to a higher number, which would mean that the banks have to maintain higher capital adequacy for these loans. So I know that I'm confused right now. So I'll just
So, like simply speak, the banks have higher risk on their side now.
yeah. See, for instance, that so if you look into the typical balance sheet of the bank, right? On the liability side, you will have the deposits which they take from the customers, right? And on the asset side, you will have advances. Right? And as I mentioned that when I'm taking 100 rupees of deposits, by design, 4 rupees has to be kept in CRR, and statutory liquidity ratio, which is SLR, 18%, right, which has to be kept with the investments. So which means that 18 plus 422 rupees, I can't give loan. How much I can give loan? 100 minus 22, which is
78.
which is basically 78 rupees. Now 17 rupees I am eligible to give loan. Now imagine I am unable to give loan because there are no great companies, there are not much. So what I say is that okay, I give say 70 as loans through my channel, but 8 let me give to NBFCs who can fund the other small and medium enterprises, right?
Okay.
So that 8 rupees what they are giving now understand the banking structure well is that if you look into a bank, right, and if you see the proportion of deposits as a proportion of the total liabilities, you will see deposits constitute almost 80% of the total liability, which means that the banks have a very low equity base, which means that equity capital and the surplus and which is generated in the business, that is very thin.
Yes.
It essentially means that if there is 20 rupees equity, 80 rupees as deposits, which adds up to 100, and on the right hand side, imagine that you have 70 rupees advances,
Yes.
8 rupees loans to NBFC, investments 18 rupees, and CRR 4 rupees, and the balance the bank is holding as cash. It means that if one of the loan which has been given out of the 70, imagine one loan is worth 20 rupees. If that loan goes bad, meaning it becomes non-performing asset, then the entire equity will be wiped out.
Yeah.
Right? And by definition, if you're looking at the definition of insolvency, it means that when the equity base has become zero or negative. So banks always stand at a very high risk of insolvency unless they are managing their credit function very well, right? And hence, what the way RBI manages this systemic risk is that the loan which they are given to NBFCs, they may ask you need to maintain additional capital on those type of loans, which means that on the liability side, they have to maintain higher equity levels, which means either they have to raise equity levels through fresh kind of issue of shares, or they can raise tier 2 bonds or tier 1 bonds to maintain the capital. And that's why in a banking parlance there is a ratio called as capital adequacy ratio, which currently scheme of things I think the minimum is 10.25%. All banks are expected to meet that.
Yes.
Okay.
So, how is fintech transforming supply chain operations? Like the technologies which you are saying, so the banking systems, the reforms, or the funds which are being allocated to MSMEs or something. Other things like how is fintech transforming the entire supply chain?
Just imagine that if you look into the data, I think there are 6.3 crores, possibly around 7 crores of MSMEs who are listed.
Yes.
Right on the platform. Now imagine that in order to get them into one platform, right, where they can access capital, there is no one single platform, right? So fintech companies are possibly making a platform, right, where they are enabling small and medium enterprises to get themselves registered, upload their invoices, right, so that they are able to get access of capital.
Yes.
Just for your information and knowledge, is that if you recall the current union budget, right, there is a new regulation which has come, right, on TREDS platform, TREDS, right. So that is a platform which is a government initiative platform where the MSMEs can list their invoices for sales discounting, right, where they can also get access to capital at a lower interest rate. Okay, so which is again a platform, but it is kind of a quasi kind of a government platform. So, like the fintech companies are providing platform, the government to enable MSME lending, they have also created this TREDS platform. Where again, that once you upload your invoices, there will be many banks which will be scouting to fund them, right, at a little lower interest because it is kind of backed by government and so on.
So, since there are some banks, national banks like SBI and all, they use this method of SPV to manage their cash flows. So, if other non-institutional banks and NFPs, how do they manage their cash flow? Because do they also list their tier 1, tier 2 bonds, or how do they manage their entire cash flow?
So NBFCs in India there are only two types, right? One is deposit taking and non-deposit taking.
Okay.
So the only way to garner capital in this NBFC is for non-deposit taking is to raise kind of institutional money,
Okay.
right? Which they can of course raise through equity or they can raise through bonds. There is no other way. No?
Yes.
No, they can't take kind of deposits. Now, whichever instrument you use, that is kind of different, right? But the point is that you have to issue a bond, which can be a form of bond or it can be certificate of deposit in the short term, right? Or you have to raise capital. There is no other way.
Yes. So, sir, from an operations perspective, sir, earlier operations was seen as a back-end activity, but now today it's become more strategic. Like, what changed? Like, what do you feel changed from that time?
So, I personally believe that operations was not really a back-end activity. It was always a function which was enabling the fulfillment of sales.
Yeah.
Whereas finance was always considered to be a support function or a back-end activity.
Okay.
The way I see things is that if you're trying to run a world-class finance function, you have to be on the forefront. You have to also start sitting on the same table where decisions are taken.
Yes.
And I think that's where I have seen where finance function have evolved, and at least I have tried to run finance functions where finance has a voice on the decisions which are important.
Okay.
So whether it is sales, operation, marketing, finally it is a number is a finance, right? Any number and impact on cash, and kind of that's what I would say that finance is not slowly, actually getting more front-end function rather than just a support and a reporting function. Yeah. And that's why I think managing that entire cash flow is very critical. Right?
So, like, what is the most common operational mistake that the startups do? Like, we have seen in India, India is a startup hub currently. We are doing very good in startups. So, what would be your view? Like, what's the most common mistake the startups are doing when it comes to their operations?
So, I can't say whether it is a common mistake or not by startups, but in general, I feel that a lot of mistakes which generally happen is your lack of master data management. I'll explain you with that. So, say when you're creating a supplier, right? Supplier, you will assign a code to the supplier.
Yes, sir.
So when you are creating a supplier code, your system will want multiple information about the supplier. Say, supplier GST, supplier span, what is the credit period agreed with the supplier, and address, and so on. So possibly these are very standard inputs, but there are also other inputs which you can give for that particular supplier. Right?
Yes.
So I think that because master data management is anyway a very dirty job, because you imagine that you have to onboard a lot of suppliers, or you have to onboard multiple SKUs in the system.
Yes.
So just you can imagine that any any agency or a retail company who are selling multiple different types of product, right?
Yes.
Each product with a different weight or packaging in a different SKU.
Yeah.
Similarly, if it is a retail company who is selling apparel, that is, the SKU will be different for a shirt which is large size, white color versus a medium size white color. Right?
Yes.
Similarly, even if the same style, the color change in the SKU has to be different, right? Because you have to do planning. Now, because it gets so, I would say, it's a headache to manage so much of activity when you are managing the masters, right?
Yes.
I personally feel that your master data management is one function which I possibly see that it is not done with the same level of rigor and respect, I would say, because you will possibly assign a very junior person to upload SKUs, but then we all want to run data analytics on a master data which is wrong. So I have seen in many companies when you're transitioning from say after you have touched 1,000, 2,000 crores, then you are transitioning to a new system, new ERP. Just because your master data is not correct, you're unable to find it.
Okay.
And master data also covers even if you have multiple stores, right? Store being an offline store, or if you have a warehouse, right? Everything is a master data to us, right? Because unless those are managed in the database properly, it doesn't work. So that is one kind of common problem. And the second is that you typically don't align your business process with finance functions. You typically think that okay, finance is more like a statutory reporting function than a business finance function, right? And hence, what you just do is that you have multiple operating spreadsheets, but you don't tie those back into a proper financial funnel.
Yes.
Sir, what are the major differentiations that one should keep in mind that separates a successful startup and a failed startup? Like, what are the key learnings that we should take?
In a operational and from the side of operations and supply chain.
So, see, I mean, I don't have any good answer for this because I think not that always something fails because of operations or supply chain.
Yeah.
Yes.
Right? Startups fail, possibly you are not able to see beyond a certain, like a milestone. You're always trying to hit one milestone. But possibly I feel that, I might be grossly wrong here, but I possibly feel that you don't run a startup to be profitable, rather you run a startup to be valuable, right?
Yes.
It essentially means that I may have very high value of a startup, but I am not operationally profitable, which essentially means that if you don't correct it, you might get good value, you might get great exits, but possibly you'll still be inefficient. And that's where I don't know. I honestly have not got an answer that, of course, I'm not against startup going into IPOs and all. Of course, they will go into IPOs.
Yes.
But have you really transformed it, those startups with a, efficiency lens? Have you really made them rating wise profitable? And then really gone into IPO is always a question. Honestly, I have not studied much, but I'm just generally saying this that one of the areas which I feel a lot of work is possible is that how to make any startup or any organization for that matter, profitably, to make it operating level profitable, right? And not with some jugglery in numbers and kind of reporting them or treating them in a different way, but how you really make it operationally effective.
So since I worked in a retail company, retail companies are basically more oriented towards operations and supply chain. So what are the key learnings that you have learned as a finance person from a retail working on a retail company?
So one is that you can't run a finance function in any company for that matter, whether retail or non-retail, by sitting at your desk. If you are working in a retail company, you should spend at least once in a day, in a week, at the store. Meaning you should really see how goods are inbounded in a store, how a cashier scans and then get the billing done. Right? If you are not able to get that puzzle solved for yourself, you will not be able to understand business with that level of depth. Because see, like when you are trying to analyze data, you should first know what is the transactional flow of data into system. As I said that you will possibly analyze sales data, but it's important for you to know what is the data generating process and which events are actually kind of creating those entry in your accounting system. Because in today's world, you'll always have some upstream system, right, which could be the likes of a POS, the point of sale system, but your accounting system could be still maybe a tally or any ERP, and there only the consolidated feed will come. Say for instance, the day end sales data will be posted as bank account debit to sales, but the transactional data will still lie at a upstream system. Now, if you don't know what are the typical integration points between your upstream system and your end system, you will not be able to do a good justice in your role, whether you are working in finance or operation, whichever role, because you should exactly know whether the system is behaving the way it should. Say, for instance, you have sold some goods on a particular day. Say, of totally there are 100 orders and the total value of sale is 1 lakh. Now, when you in an ideal state, everything should be pushed, right? But say in the store they didn't do a day end kind of a processing, because of which only say 90,000 got pushed. So when you are seeing 90,000, unless you know that there is also a reporting cost which I should generate and then see the gap between your downstream system and upstream, If you don't know that, you will not know that how it will be solved. Because while for the particular day in the month it is okay, but when you're closing the books on say 31st of a month, which you should exactly know, okay, this is the month-end reconciliation process I should run to ensure that my upstream and downstream system are in sync. Right? So hence to know the store opening process, store closure kind of process, because every day when a store opens, there is a store manager will do a kind of a cash check, right? They will see that how much money is lying at the till. They will see that how much inventory is there in the system. So all of these aspects are very critical, right? And you will also hold inventory in the retail store, right? So you should possibly knowing that the store level, which are the SKUs which are selling better, which are not. Are there any issues which you can see when some of the inventory is not getting sold with the right velocity, which means that there is a risk of inventory getting obsolescence and so on. So forth, right?
So, sir, now we'll move to something interesting and controversial at the same point. Basically, it's the industry reality check. Like, sir, are there any unethical practices or gray areas in supply chain or finance? But professionals should, like the professionals who are the students, professionals should be aware of. Like things like these will also happen in the industry, or
So, see, very honestly, it's a unnecessary debate, right?
yeah,
The point is that the way I started this conversation, that you need to know that you have to do the right thing, right?
Yeah.
And there is no dearth of finding people who do the right things, right?
Yes.
There will always be people who may not do the right things, right? For whatever reasons, which I can say.
Yeah.
But I would always, tell you that doing the right thing it may take a little longer, but that is right, for the organization. And if you believe that you want to run a company by doing the right things, uh, things may not happen at the speed at which you want, but at least you will get the velocity once you have kind of crossed the target. So I would always insist that whether ethical or unethical, there is very thin line at times when you are actually sitting on the chair.
Yeah.
So whether it is unethical or not, you should be very convinced that you are doing the right things and not putting anyone at risk. And in specific, all the stakeholders who believe that you are actually holding a CFO or a CEO position, and you are the last line of defense for that. Right? So I would leave at that and not get into the ethical practice that is.
So, like in your career, being in this journey for a long time, have you seen companies which like went really bad, like which literally got destroyed for one unethical practice or doing something off track, like out of the industry norms or out of the regulations?
I think all of us know, right? I think this Satyam, right?
Yeah, Satyam, Hyderabad.
Case, I don't need to tell you guys about that, right? But it was in my mind, of course, unethical, right? You wanted to grow fast. You don't need to, you thought that I'll make this adjustment once, but then it becomes a habit, and you're not, you will be not, you're not able to come out of the loop. And I think if you read about these fraudulent practices, one thing is a saying which says that if you try it once, thinking that okay, let us do for only one time, but that habit doesn't kind of get you anywhere. And if it's a wrong thing, you should not do it at all. It is better to be transparent and seeking help. That hey, this is a situation which has happened. It is always better. I feel that way, that it is better to seek help and seek guidance rather than do the wrong thing.
Yes, sir. So when you were a CFO, did you fire any of your subordinates? Like, did you found someone doing something unethical or?
No, I mean, as I said that when you are a CFO, you set the right expectations.
Yeah.
You don't fire people because the expectations and things are set right, and it's not that you have to only fire when you're CFO, right? If you are seeing your peers or colleagues also not doing the right things, you should still
Act as a whistleblower.
and act as a whistleblower. I always feel that it is important to at least aspire to do the right things, right? And possibly flag when you see that things are not going right, or at least clarify.
Yeah.
You may not be doing everything in the number of the business, but yeah, to me, I'm not. I would always feel if you have to be, performing at the right standard, you need to set yourself to some of the disciplines which are needed for that role. Right?
Yes.
And you need to be very cautious what they expect of you.
Yes, sir. Sir, like, is India ready to become a global supply chain hub? Sir? Like, this is really out of context. Like, all around the way, this will be a question related to the globe, like India. Can we be a global supply chain leader, sir?
I mean, why not? I mean, I don't see there's no any reason why it can't be. Right? I mean, there could be only one thing which can, act as a deterrent, and only one thing is, are we ready in terms of the ease of doing business?
Yeah.
Right? While I'm sure that a lot of regulations have changed, we are simplified, even many regulations, even labor code, a lot of simplification has come, but I think there's still some time to see that whether the simplification has really benefited people on the ground.
Okay.
That I don't know because I'm not so close to the ground as of now, but I still believe there's a little longer journey for us to, be, rank um, much higher when it comes to ease of doing business. I think as a common man, I still don't see those regulation, the regulatory initiatives taken to simplify things has really benefited the common man. So I still see there's a long runway. While I have no doubt that India will not be a supply chain hub, but I can't say in how many years.
Sir, and also the recent geopolitical tensions, being it the tariffs from US and everything, how did that affect the supply chain and also the finance market of India?
Again, I think those are very macro level questions. So I know that the way the tariffs impacted it is again it has impacted the margins of many companies who
Yeah.
have a lot of customer base in the US, right? And because it happened in such a way that you couldn't have been planned for your finances, you may not have planned how you can support your financial base, right? Because possibly those tariff rise you will not be able to pass on to the customers as a higher selling price, right? So the companies which were unable to pass that higher tariff price to their customers in the global counterparts or global government, they have suffered.
Yeah.
And good that it was solved in maybe 2-3 months, but that's a big impact. Right?
Yeah.
And hence in many cases those have all been meaning there has been impact on the overall sales, overall margins, and it has been it has been bad. Right?
Yes.
We have to see that because the tariff impact possibly could have impacted in the last quarter of this current financial year, 25-26. So I think it's still a wait and watch to see how March numbers come out, and it will be good. I would say a case study which you guys should do by just taking some top companies or even BSC 500 companies and just plot the quarter numbers and see if you see any anomaly in the Q4 numbers in terms of some gross margin pattern or average selling price or sales. I think that can give a better visibility that how much has been the quantum of the impact.
So this would be a good suggestion for the viewers. Like, they can take up the case who are really interested and who are seeing the podcast till this point. I think they should take up this and make a good report out of it. Case paper, obviously, sir. And if there is any paper from the students, will you take it out? Like, will you check it out, sir?
100%.
So here is sir's word. So sir will also check it. We will also get something from the side of operations club. We'll surely do something, and yeah, we would like every student who's watching this to try something out of it. It will become a good push to your CV and also for your experience.
So here are some future of operation and financial career related questions. So what new roles will emerge in operation and financial supplies in our next 10 years? Point.
I personally feel that you will have only analyst roles, right? And analyst you can analyze, you can analyze operations, you can analyze finance, and hence I always keep on saying that there is no reason to believe that if you're doing a major in operations, you can't do a finance job because over time, if you have to really save money, you have to understand finance. Generally, a person who is doing finance major need to understand operations, to save money, right?
Yes.
Because I think the differentiation which each one of you can make to any industrial company is that trying to analyze transaction and process flows to understand where the leakage is there and try to solve them, right? And bringing efficiency to the system. So I think the roles I have not a very clear view, but I think try to be a good problem solver, right? And whether it is any field, whether it is operations, finance, marketing, we are problem solver. If you are problem solver and if you have the skill sets to solve problem, when I say it is solving problem, it means that what is the root cause of the problem, right? Trying to understand those aspects of what you call as the 5 why. You keep on asking the whys to a problem and then generally say that once you get the answer of the fifth why, that is the root cause of the problem. So if you are able to bring those skill sets, then you can convert that into like a program, meaning, okay, what should I solve in 30, 60, 90 days? I think that's where those roles will be very critical. Right?
So, like, your answer is somewhat giving a hint that AI might take over, like the regular jobs which are in operation supply chain. Are you saying that they will fade out and mostly they'll turn towards the analytics side, like the human jobs would be more towards analytics?
Again, this is a very foundational question, and okay, if I have to answer with a philosophical hat, I would say that till now there has been no change in technology which has taken away jobs. Right?
Okay.
If you look into when computers were introduced, right, they may have taken some jobs, but they have created more. Similarly, AI may have taken jobs, but it is still time to see that has it created different type of jobs.
Okay.
Right, and hence at a philosophical level, if you think that human beings have to exist on this earth, possibly there will be some jobs which will be created by design.
Yes.
Right, otherwise, though, there's a big flag everywhere. Everyone should stop doing anything. Which
Yes.
has happened till now. Everyone is doing.
Yes.
Of course, there are tensions in the market. People may be losing jobs, but I don't personally feel that it will, take away more jobs than creating fewer jobs. It will create possibly 5x, 10x jobs or job types or job roles, which essentially means that it is important to be always open to learn and constantly thinking about new skills.
So these days there are some basic skills that are must for the industry, be it Excel or be it Tally ERP. So what according to you are some non-negotiable skills which individual must have to get a job in few upcoming years?
So I think learn one minimum one tool, right? Whether you be a good person who can possibly see a problem and convert it into a easy spreadsheet table, or you know Python or R so well that you can model things faster.
Yes.
But I can tell you what is needed at a managerial level. Meaning like if you join as a fresher from a B school to a company,
Yes.
at a senior management level, everyone wants simplicity. And no one has the patience to possibly look into too much of data. Right? When you take decisions in today's world or even earlier, the way the brain works is that, okay, you give me scenarios and you anchor on some one output and then say whether in which scenario, how that output is moving. And then recommend that I believe that if you're acting on improving gross margin, the best decision is to increase the selling price. However, there is a challenge that whether because we may lose some customers, due to the price hike. But that's where when you open up the debate to say that okay, if now we say that it is not possible to increase the selling price, then maybe that option is not something which falls in the feasible region, and hence then we have to take the option 2, where maybe we'll not make as much as margin, but that's the only option which you have. So I think what is needed from people like you guys when you hit the industry is that are able to give different scenarios, right, and the levers which are impacting those scenarios, so that someone like us can take quick kind of action or kind of decision. Or even if the decision is not easy, we know that what steps to be taken to take the decision. Right? So that's what I think.
So, sir, now we'll have a quick rapid fire round before closing the lengthy interview. So, yeah, sir, I'll just start it. So, finance or operations?
Okay, before that, is there option to say both?
No. To make it
It should
interesting,
be only one, sir. Only one for now. Like, sir, any two questions you can say both,
Okay.
but we want explanation for it.
Okay.
So, finance or operations?
Both.
Sir, a small explanation. Yeah.
okay, sir.
I don't know other questions, so I'm just using the first option. Yeah, because I personally feel that if you don't know operations, you can do a good finance.
Okay.
So hence, I say both because I mentioned this in the beginning.
Yeah. That both are interlinked. To be a good leader in such in a high position in both these
Not
domains.
even if you are in a junior most position, right?
Okay.
Possibly when you are getting into the induction, they will give you a workshop about the finance process.
Okay.
Try to not say that I also want to go to the store, I also want to go to the warehouse. Ask them how your operations work, right?
Yes.
They may be a difficult question. It may be something you maybe thought, okay, why this guy is wanting to see know so much, but try attempt, right?
Yes.
And that is the most important part.
Sir, corporate or consulting?
Okay. I'm doing consulting.
Okay. Data or intuition?
Both.
Both. Really?
I lost on my life.
Yeah.
But again, in today's world, you will possibly be able to take decision only with 75% of data,
Yeah.
25% in ambiguous, right?
Yeah.
So in many cases, you will take some decision which is 75% data and 25% intuition. Because possibly you know that you have seen this enough and more, and while there's a risk, you still feel that it will work, right? So when you hire a person, there is a 100% chance that the person, or maybe 99% chance that the person will be good, or 1% chance that person may not do well, right?
Yes.
But in some cases, you also see that 1% chance the person will be good and 99%. So that time you will not hire the individual, but that 1% can suddenly become very high once you see him or her for 2-3 years. Right? So intuition is always there. Not that everything is perfect. Right? If it was so binary, then the interview could have been done just by AI. Right?
Yeah.
I mean, it's so binary. Right? But this is not the case. There is still a degree of qualitative aspect which is there in each decision which is there.
So, risk or stability?
Stability.
Okay. One book every operation student must read.
Sorry, what?
One book every operation student must read.
Learn from experiences. Learn by doing. I don't know the book.
Okay.
Learn by doing.
Yes. So, one habit that made you successful?
Being curious and trying to learn new skills.
Okay. One skill students underestimate.
Being patient.
Okay. So, one industry you are most excited about?
I would say finance industry, finance and finance services
Okay.
industry.
Yes, sir.
So, and also one rapid fire question from my side.
Out of the
Out of the list. Yeah, out of the list.
Would you rather have $1 billion right now, or the same knowledge that you currently have at the age of 18?
$1 million
Right now, or the knowledge that you now have, you have the same knowledge at 18? At the age of 18. At the age of
same knowledge at 18
Or
$1
$1
million
right now.
right now.
Yeah.
I will always know my knowledge. But I will be confident that 18 I didn't have any knowledge. So I assume that I'll keep on building, but I'm not anyway tag a value to the thing.
Yes, sir. So, sir, we have one last question. The closing question. If you had to redesign India's entire supply chain and financial ecosystem from scratch, what 3 changes would you make first?
Okay, on a lighter note, possibly I would think that if I could, nominate myself to be the finance minister.
Yes.
I would give
So you can actually.
more room to make a change.
So, would you be interested if you get an opportunity to contest and
Why not? If I put it, why can't
controversial like that? So, sir, yeah, that's the question. What would be the 3 changes that you would make first?
See, again, I would still think that, if you recall, I mentioned about the intended consequences of regulation, right?
Yes,
Say
sir.
that There's enough and more effort which has happened in the last 10 years to make things easy. But whether really everyone has got the benefit or not, I have my doubts. So, given a choice, I would try to solve that at a grassroots level, that if there's agencies on which you can actually work and really understand the pain, right? Even if now if you go to some, small and medium enterprises who are really doing good, maybe 30, 40 crore, but they all know that they don't get the support of the banks, right? And banks in a way, in a realm of trying to be efficient, you don't have a face who can actually help that individual, right, who has come, to discuss about, these are the kind of requirements, right?
Yes.
So, I think there's no straight answer, but is there a way how you can design something so that there is still a human touch to this entire interaction to understand the problem, right? I think that one of the things which AI is actually doing is that the human touch is slowly going, right?
Yeah.
As a case of kind of transaction. Even now, like, because customer service by design has been impacted the most, I would say,
Yes.
or maybe software services. But customer service has the feel of calling up the customer care has totally died down, but still the problems exist, right? I mean, where is my order is the most commonly asked question.
Yeah.
But still now, you don't get the answer which you want, right? Even whenever you're ordering anywhere, you know that whatever is there, which is pushed by AI kind of chatbot, that anyway you know.
Yeah.
But it is not moved out of the warehouse, so please wait for 3 days. That's a standard thing. But you can't, I still can't fathom that my question is that why it is being held at the warehouse beyond the time which is expected. That is still not being answered. So I personally feel that few things which have been taken away by AI and the story kind of come back, because I think by losing the human touch is not the answer to get the data.
Yes, sir.
How to adapt AI.
Yes, sir. So one mistake fresh graduates make in corporate operations role.
Okay. Possibly, you start to start delivering without understanding operations of the business.
Yes.
Because you're always, wanting to go up the hierarchy fast. You're always thinking that okay, what's next for me? Okay, I've got an analyst. When can I become senior analyst? When can I become possibly become a manager? So I'm not saying you should not be ambitious, but you should have the
Patience also.
the patience and also the depth of knowledge so that you are valued much more when you grow up in the ladder.
Yes, sir. So, sir, that's the end. Thank you for the time, sir. It's a really valuable podcast. I think we'll help most of the students. Thank you, sir.
Thank you for giving me time.
Yes.
Although I was bored with the
No, no, sir. No, no, no. It was great.
Thank you.
Thank you, sir.